Hello. Thank you for viewing Accounting Assets by GatorGrades. Let's begin with a question. What does accounting do? Accounting organizes each financial action of business into accounts, and one of these main account groups are assets. For example, the vegetables that we see in this photo would be an asset because the business could potentially sell these to a customer. Other assets include the lighting, shelves, and crates that present the vegetables to customers for sale. Asset accounts are a group of accounts used to record items that have a dollar value. A simplified way to think of an asset is to ask if an item is cash or if it could potentially be sold for cash. Asset accounts record the dollar value of items that can be sold for cash or are cash. The cash asset is the most common and usually one of the most wanted of all business asset types. Top three asset accounts. Number one, the business cash account records the total amount of cash. For most businesses, cash is kept at the business location or in a checking, savings, or other investment account. A second asset account that would be used in most businesses is the accounts receivable account. What is accounts receivable? When a customer makes a purchase and requests an invoice to be paid at a later date, rather than making a payment at the time the goods or services are sold, the amount they owe is an accounts receivable amount for the business. Thinking back to the example a moment ago with the vegetables, if the grocery store accepts the delivery of 50 heads of cabbage, they may sign to confirm the cabbage was received, and the cabbage farm would provide an invoice requesting payment by a certain date. Did you know that an accounts receivable amount may exist for an individual as well as a business? The third account that is a top three asset account in a business would be inventory. A business that sells products will need to have inventory available to sell. The dollar value of the inventory would be reflected in the inventory account. Let's recap what we have discussed. An asset is cash, or cash the business is waiting to receive, or something that can be sold quickly for cash. When is a business waiting to receive cash? When a customer asks for an invoice, then the company gives away inventory at the time of sale and the customer gives a promise to pay in the future. The company did not yet receive any cash payment. Let's investigate an example scenario. Yesterday, the business cash balance was $7,465 and the accounts receivable balance was $800. Today, the business cash balance is $7,765 and the account receivable balance is $500. Looking at the cash balance yesterday as compared to the cash balance today, we see the business has $300 more in the account today. We could also look to the accounts receivable balance to see the balance was $800 yesterday and today it is $500. This indicates to us that the business received the payment of $300 today and therefore the accounts receivable balance decreased because it no longer is waiting the $300 from the customer as it was yesterday. And it was deposited in the cash account, giving us an increase of $300. In summary, by looking at the change in the cash and accounts receivable accounts from yesterday to today, it would be fair to assume the payments received that were accounts receivable were received and equal to $300. When a customer pays an amount due, the accounts receivable balance will decrease and the cash account balance will increase. Let's discuss the inventory account and consider why is inventory an asset. Inventory is an asset because the dollar value of the inventory has the potential to be sold, and when sold, increase the cash account balance. Thinking about inventory, what are items these retail stores likely have in inventory that is ready to sell to customers? Atlantic Sun and Swim, what do you think they might sell in a store with the name Atlantic Sun and Swim? Did you guess a beach towel or a bathing suit? Beach towels and bathing suits would be inventory that potentially could be sold for cash. What about Eyes for You for Less? Do you think they sell cars at this store? Not likely. It is more likely that the inventory in this store may include eyeglasses or sunglasses. Our next store, Dave's Denim Depot. The name of the store lets us know that Dave is likely a snappy dresser who enjoys wearing denim jeans. Jeans would be likely an inventory item at this store. Next is Fur, Feathers, and Fins. What might be some inventory in this store? Perhaps hamsters, birds, and fish? Since inventory has the potential to be sold for cash, their value would be reflected in the inventory account for the business. The next store is perhaps not as obvious. The name of the store is the Coco Yum Cow. What might this store sell? Perhaps hot chocolate or other treats would be reflected on their inventory list. And our last store, Heels and Flats. What would be the inventory items for this store? Did you guess pizza? Not likely. But if you guessed shoes, there is a good chance that their inventory list reflects the dollar value of shoes available to sell to the customer. Within asset groups of accounts are different types of assets. One asset type is a tangible asset. Tangible assets are assets in a business that have the potential to be physically touched. Assets can be thought of as being organized into two categories, tangible and intangible. Let's first define tangible. Tangible, you can touch it, point at it, or feel it. What are some tangible assets likely to be found at a restaurant? Let's look at the picture. Tangible assets in a restaurant may include the tables, since they are something you can touch and the business can potentially sell for cash. What about the chair? Can you touch the chair? Can a chair potentially be sold for cash? Yes. So the chairs are another tangible asset. What about the lights in the ceiling? Are the lights in the restaurant something you can point at, even if you can't reach them? Could lights potentially be sold for cash? You bet. Lights, chairs, and tables are all tangible assets often found in restaurants. What is a tangible asset? A tangible asset is an asset that you could point at to show where it is or can be touched. Which tangible asset do you see inside the store? Take a moment to look at the photo and consider the question, which tangible assets do you see? Did you identify the lighting as a tangible asset? Perhaps the signage, office supplies, furniture, or the inventory in the display case available for sale. Each of these items are tangible business assets that have the potential to be sold to increase the business cash account. Do you like to visit retail stores? Often a retail store has tangible assets available for sale. Let's further consider tangible assets. Looking at this photo, what are some tangible assets for this store? We can use the sentence frame to answer the question. The business is a music store. Two tangible assets likely found here are guitars and guitar cases. What about store number 2? Using the sentence frame, What do you feel are two tangible assets that may be found within this store? Perhaps your sentence frame is this business is a supermarket. You guessed it. Two tangible assets likely found here are peppers and a produce scale. And picture number three. Here we see a vendor on the street. Although they are not a retail storefront, they are also a retail business with tangible assets. Using the same sentence frame, this business is, that's right, a hot dog vendor. Two tangible assets likely found here include hot dogs and beverages. Now that we have discussed tangible assets, let's go on and discuss intangible assets. Intangible assets are the assets of a business that you do not see and can't be touched, but they do have value. Intangible can't be touched or pointed at and is not a physical item. Have you ever created one of these items? An invention? Maybe a poem, a song, a drawing, a story? Then you have created an intangible asset, and this is your intellectual property. Each of these intangible items, they are your creation, something that needed your creativity to exist. If you have created any of these items, then you have created an intangible asset. Intellectual property brings value to a business, and intangible assets, such as intellectual property, can be an asset. Let's review. What is an intangible asset? Intangible assets are the assets within a business that you do not see or touch, but do have value and have the potential to be sold for cash. Intangible assets, the amount of money the intangible items could be sold for, or the amount they earn the business, the value of which is shown in the intangible assets account. Intangible assets can be quite valuable. Consider a songwriter and all of the songs they have written, or a new computer invention. A business can own the idea or the creation, and the value of this item is reflected in an intangible assets account. Let's look at some different items within a business. Within these tangible and intangible assets, where would each value be reflected within the accounting records? For this example, the accounts include furniture, electronics, trademarks, and intellectual property. An office desk. The dollar value associated with this office desk would be recorded in which account? If you said the furniture account, you're correct. What about a company app? Would this be furniture, electronics, trademarks, or intellectual property? Did you correctly answer that an app is intellectual property? Our next items are cell phones. Would the value of these cell phones be recorded in the furniture, electronics, trademark, or intellectual property accounts? Did you say electronics? The value of the cell phones are recorded in the electronics account. Computers, like cell phones, would also be recorded in the electronics account. In which account would you record the value of the company logo? The company logo is trademarked items that help customers visually recognize the business and allows it to stand out from its competitors. The logo is recorded in the trademarks account. Our last item is an invention idea. Is an invention idea tangible or intangible? An idea is intangible, and an idea has the potential to become intellectual property for a business. Thank you for discussing assets and liabilities with GatorGrades. Let's review a few items before we go. What is an asset? Assets are items in a business that have a value and can often be sold for money. Tangible, an item that could potentially be pointed to or touched. Intangible, an item that cannot be touched, an idea. Accounts receivable, amounts owed to a business that have not yet been paid. Inventory, the materials and supplies a business has on hand. Thank you for learning with Gator. Thank you for learning with GatorGrades. To see more videos developed for teen learning, please like and subscribe. I hope to learn with you again soon.